Kim Gaxiola, Certified Financial Planner and Partner at Resilient Wealth Planning. One of your focus areas is helping clients to manage restricted stock units, or RSUs. As we near the end of the year, what are the major considerations for holders of RSUs?
Thank you, Chris. We're going into the end of the year, and so it's natural to start thinking about your taxes, what you will owe when you start the new year and prepare your 2025 tax projections. And so that's really a key ingredient of what sometimes will cause employees to not act because they think that if they do anything with their restricted stock units, it's going to cause a lot of taxes. When in reality, just vesting and doing nothing still causes taxes. So don't be scared in April when you're filing your taxes or be shocked at what you have to pay in taxes based on whatever you had received invested in stock in restricted stock units from the prior year. So really want to make sure that you are working with a tax professional to get your tax projections on whatever you've done in your activity with buys and sells in your restricted stock, and then make sure you have that money saved away or have paid the estimates that you need to pay. Because there's also the issue when you don't pay enough in taxes, the IRS can give you a penalty on that as well. So make sure you pay those estimates and are prepared for tax time.
More broadly, what are the services that you provide at Resilient?
So we are a full service boutique firm. We lead with planning, and that means we really want to take a look at all of your assets, your liabilities, and your cash flow, income, expenses, and review it all and make sure you are on a roadmap that is appropriate for you. I have my background. So what will you do when your money works for you? We really want to look at your values and make sure that you're spending your money and it matches the values that you have. So much in this day and age revolves around what our neighbors are doing, what other people have, but that may not be our values. And so we really want to look at how you're spending your money and what you have available for all your future plans and how they map out with your own values. And really, it's a long-term planning process that we do. But naturally, as we do that planning, taxes is always something that comes up. And we do have my partner, Carolyn, is an enrolled agent. So we are available to do planning with restricted stock units and understanding what the tax consequence will be in order to make sure that we alleviate some of that risk because they are also a big risk when you have, a lot of people have a couple $1 million in their company stock. They have their paycheck from their company stock. And so we really want to manage that risk for the future and have and not let tax be the thing that stops you from acting a certain way. And so that's a big part of our practice, as well as estate planning, which is for the legacy planning. So, what do you want to do with your assets as you pass them on to the next generation?
Kim, thank you very much for your time.
Thank you, Chris.